Hey everyone, this is Alison Dunn, and you're listening to the Deliberate Leaders Podcast. Today, we're cutting through the fluff and getting real about something that makes or breaks businesses: cash flow. I'm going to be direct with you. I've seen brilliant entrepreneurs with amazing companies fail because they didn't get this right. And I've seen average businesses thrive because they mastered it. Let's dive right in and talk about cash flow versus profit. Let me ask you something, and be honest with yourself here. Do you really know the difference between profit and cash flow? Because I'll tell you what I see every day in my coaching practice. Successful business owners nodding their heads about profit, while their companies are bleeding cash. Here's the unvarnished truth. Profit is like your Instagram profile. It looks great on paper. Cash flow? Well, that's your real life. Take Sarah, a tech CEO. Her business showed $200,000 in quarterly profit, but couldn't make payroll. You might be thinking, why? Because that profit was tied up in unpaid invoices and inventory. Real profit means nothing if you can't pay your people. Let's get crystal clear about projections. If you're not doing 6-month cash flow projections, you're essentially driving your business blindfolded on a mountain road. And I've seen too many businesses drive right off that cliff. Here's what my research data shows. 78% of failures had no cash flow projections. 92% who doubled growth had detailed projections they reviewed weekly. 100% who weathered major market disruptions had active cash flow management. Now, let's talk about need for the discipline factor of financial discipline. Being a disciplined business owner often means being the bad guy. Another client of mine, he is great with customers, but terrible with finances. He struggles saying no to staff advances, kept ordering extra inventory just in case, and letting bills pile up because he didn't want to seem pushy with late-paying customers. After implementing strict financial controls, the following happened. Employee theft dropped to 0, product waste decreased by 45%, staff turnover decreased because everyone knew where they stood, and profits jumped 60% in 6 months. In reality, the fastest growing companies I work with aren't always the ones with the most sales. They're the ones that understand the chess game of cash flow and are playing to win. Another example? Last week, a construction company owner told me he turned down a $2 million project. Why, you might ask? Because taking it on would have bankrupted him. It required $400,000 up front, had 90-day payment terms, and his current cash flow couldn't support the gap. Even worse, it would have sacrificed 5 smaller, more profitable projects. That's the kind of clear-eyed analysis that builds sustainable businesses. So, what are the cash flow warning signs you need to be looking for? First, the credit card shuffle. Using one card to pay another, or maxing out personal cards for business and juggling payment due dates. Second, the tomorrow syndrome, including putting off vendor payments, delaying tax payments, and constantly promising the check is in the mail. Third, the growth trap, including taking on new projects before getting paid for completed ones, hiring without stable cash flow, expanding while existing locations struggle. If any of those apply, let's talk about action steps that you can start doing today. First, let's do a reality check by pulling up your bank statements. List every penny in and out and face the numbers, no matter how uncomfortable. Second, take these actions to start the cleanup. Call every late-paying customer. Renegotiate vendor terms. And cut unused subscriptions. Third, let's create a system to help you better manage your cash flow. Create a 6-month cash flow projection, set up automatic payment reminders, and schedule a weekly financial review of your business. Here's the bottom line. Cash flow management isn't sexy, but it will keep your doors open, your employees paid, and your business growing sustainably. Your bank balance is your business's truth teller. No matter what your profit and loss statement says, cash is what keeps the lights on. This is Alison Dunn, and you've been listening to the Deliberate Leaders Podcast. If today's episode made you uncomfortable, good. That means you're ready to make changes. Stay deliberate, stay focused, and I'll see you next time. Remember to subscribe and leave a review if this no-nonsense approach to business success resonates with you. Check out our website at deliberatedirections.com for free resources and consulting opportunities.